Can your investments reflect your values and still generate competitive returns? Over the past decade, a powerful trend has emerged in the investment world: ESG, environmental, social, and governance investing. Driven by increasing awareness of global challenges like climate change, social inequality, and corporate accountability, ESG-focused funds have grown exponentially. In 2025, they are not just ethical choices, they are strategic financial decisions. Let's dive into why ESG investing is booming and how you can leverage it for long-term success. What is ESG investing? ESG investing involves evaluating companies based on their environmental impact, social responsibility, and governance practices alongside traditional financial metrics. This framework enables investors to align their portfolios with personal or institutional values without sacrificing returns. The components of ESG: environmental, a company's impact on the planet, including its carbon footprint, renewable energy initiatives, and waste management. Social, how a company treats its employees, customers, and communities, focusing on diversity, labor practices, and human rights. Governance, transparent leadership, ethical decision-making, and accountability within the company structure. Why is ESG investing on the rise? 1. Changing consumer preferences. A 2023 survey by Morgan Stanley found that 78% of investors are interested in sustainable investing, with millennials and Gen Z leading the charge. As these generations accumulate wealth, their demand for value-driven investments is reshaping the market. 2. Strong financial performance data shows ESG-focused funds can match or outperform traditional investments over the long term. For example, companies with high ESG ratings often demonstrate resilience during economic downturns, thanks to better risk management and reputation. 3. Regulatory push and corporate accountability. Governments are increasingly mandating ESG disclosures. In the U.S., the Securities and Exchange Commission, SEC, has proposed rules for standardized climate-related disclosures, making it easier to assess ESG performance. 4. Climate crisis and global challenges. With climate disasters and social unrest becoming more visible, investors are using their capital to support solutions. Funds directed towards renewable energy, healthcare access, or equitable employment practices are not only ethical but also smart bets for the future. How to get started with ESG investing. 1. Choose ESG funds or ETFs. Many funds now focus exclusively on ESG-compliant companies. Examples include Vanguard ESG US Stock ETF, ESGV, a low-cost auction tracking ESG-screened US stocks. iShares ESG Aware MSCI USA ETF, ESGU, broad exposure to ESG-friendly US companies. 2. Evaluate individual stocks. You can research specific companies with high ESG scores. Leaders like Microsoft, Tesla, and NextEra Energy are praised for their sustainability efforts and transparent governance. 3. Use ESG scoring platforms. Tools like MSCI ESG Ratings and Sustainalytics provide detailed ratings for companies, helping you identify those aligned with your values. 4. Engage with your investments. Many ESG investors practice shareholder activism, pushing companies to improve their practices through voting rights and public advocacy. Challenges in ESG investing. 1. Greenwashing. Some companies exaggerate their ESG credentials to attract investors. Look for third-party certifications and ratings to verify claims. 2. Lack of standardization. The ESG landscape is still evolving, and metrics can vary between providers. Combining multiple sources can give a clearer picture. 3. Performance concerns. While ESG funds have shown strong performance, critics argue that prioritizing values over profits could reduce returns in some cases. Balancing ethical goals with financial ones is key. Expert tips for ESG success. Think long-term. ESG is a future-focused strategy that rewards patience. Diversify. Don't limit yourself to one sector. Explore clean energy, healthcare, technology, and other ESG-aligned industries. Stay informed. Regulatory changes and market dynamics can influence ESG investments. Follow trends and adjust your portfolio accordingly. Can your investments reflect your values and still generate competitive returns? Yes, ESG investing allows you to align your financial goals with personal values, offering a unique opportunity to drive positive change while building wealth. With careful selection and long-term thinking, ESG can be both profitable and purposeful. As ESG investing becomes the new standard, now is the time to integrate it into your portfolio. Ready to take the next step? Subscribe for more investment insights, and share this video with your network to inspire sustainable growth.